However, slowing business investment and trade and a weakening measure of the UK's dominant services sector has undermined the pound against the euro. GBPEUR has fallen 0.3% to €1.123, with losses also attributable to a run of above-forecast PMIs from the seemingly robust Eurozone economy. The services industry, which accounts for nearly four-fifths of the UK's economic growth, expanded at a slower pace than expected on the month in September, holding at an upwardly revised 0.1% instead of rising to 0.2%. Total business investment rates also softened, with growth on the quarter slowing further than expected from 0.5% to 0.2%. Annualized investment growth slipped 10 basis points lower than economists had projected, dropping from 2.5% to 1.3%. Overall, the latest business investment figures show that Q3 was the worst quarter since Q4 2016 for capital expenditure. While household consumption rates actually picked up, climbing to 0.6% on the quarter, partly thanks to a partial recovery in car purchases, markets are more focused on the poor investment figures, as well as disappointing trade results. The Office for National Statistics said in Q3 2017, the net trade deficit widened by £2,536 million to negative £11,737 million in volume terms, the largest widening since Q3 2016, contributing negative 0.5 percentage points to GDP growth. GBPEUR has fallen 0.3% to €1.123. Total trade exports decreased by 0.7% whilst total imports increased by 1.1% between Q2 and Q3 2017. Economists claimed that the weakened pound-sterling exchange rates following the referendum would benefit exporters thanks to the effect of making UK exports cheaper for foreign buyers, so weak trade performance has soured appetite for GBP. Conversely, positive trade data is one of the reasons the euro is on the rise today, with German exports having risen significantly above forecasts to grow 1.7% instead of the expected 1.1%. Subsequent data releases have also proved positive, firming the view that the Eurozone economy is in robust health and on track for its best rate of growth in a decade. Tuesday, March 28, 2017. How to get the best exchange rate. The French, German and Eurozone preliminary manufacturing, services and composite indices all posted significantly above forecast growth rates, with the only exception being Germany's services index, which rose 10 basis points less than economists had anticipated. Particularly impressive was the news that the pace of hiring in the currency bloc had hit its best rate in 17 years. IHS Markit chief business economist Chris Williamson said the message from the latest Eurozone PMI is clear: business is booming. Growth kicked higher in November to put the region on course for its best quarter since the start of 2011. German exports rose significantly above forecasts to grow 1.7% instead of the 1.1% expected. The PMI is so far running at a level signaling a 0.8% increase in GDP in the final quarter of 2017, which would round off the best year for a decade. There is no UK data left for release today, but the euro could see further gains, or register losses, after the publication of minutes from the European Central Bank's ECB the 26th of October policy meeting. The focus will be on what policymakers said with regards to the outlook on quantitative easing. Should the Governing Council seem inclined to favour further tapering, the euro could climb sharply.